Hi students, welcome to Rashid Virtual Academy. I am Dr. Mohammad Noor Alam, and today we will study about classification of accounts and accounting equations. So let's move to the first slide. And first slide about classification of account. Transaction can be divided into three categories. Before going to that thing, first we have to understand what is transaction that we already discussed in the previous lecture. Transaction means financial transaction, means those transactions which can be measured in terms of money. So transaction, first category of the transaction relating to the individual and the firm. Second category of the transaction relating to properties, goods or cash, or you can say it's totally concerned with the assets of the company. And third category of the transaction generally relating to expenses, losses or income or gain. So on the basis of these categories, we can say accounts can be classified into three parts. First is personal account, second is real account, and third is nominal account. Now, personal account. The personal account which relate to personal account include the following, means we can distribute the personal account into three further parts. First is natural person. Natural person means those person which can be created by God only. So accounts which relate to individual means person. For example, Ali's account, Aslam's account, etc. means any names. Any names is related to the person is called natural person account. Second, in this personal account is artificial or legal person, means accounts which relate to a group of persons or firm or institution, or you can say those persons which are created by law, just like firms, just like institution, just like you can say partnership firms. So for example, Bakhtar University, Karwan University, Bank of America, Samsung, Microsoft, Cosmopolitan Club, etc. These are the example of the artificial or the legal person. Means these are created by the law. So these are called artificial and the legal person. Now third category under the personal account is representative personal account. Means those account which represent to a particular person or group of person is called representative personal account. For example, outstanding salary account means this salary generally represent to that person whose salary is outstanding to the department. Or same for the prepaid insurance account, etc. Prepaid insurance means the insurance amount that you already paid. So this amount generally represent to that person whom you paid the prepaid insurance account. So this account is called representative personal account. Now, the proprietor being individual, his capital account and his drawing account are also personal account, because capital represent to the owner, means how much amount invested by the owner is represented by the capital, or you can say drawing is the amount withdrawn by the owner. So drawing ultimately represent to the amount withdrawn by the owner. So both these two accounts, means owner's account means capital account or drawing account is representative personal account. So ultimately this is called personal account. Now come to the next account, and that is impersonal. Means all those accounts which are not personal, means not individual account, not company's account, or not natural person account, representative personal account. All those accounts which are not personal is called impersonal account. And impersonal account further divided into two parts, that is real account and nominal account. So first, real accounts are those accounts which relate only to the properties, or you can say those accounts which represent to the assets of the company owned by the business is called real account. Or you can say real account only concerned with the properties and the asset owned by the business concerned. It includes both asset, tangible and the intangible asset. Tangible asset means those assets whom we can touch, we can feel, and intangible asset means those assets whom we cannot touch, just like goodwill, just like patent, just like computer software. So for the example of the real accounts are land, building, goodwill, purchases of the stock, sales of the stock, machinery, etc. Now the next and the last account is nominal account, means those account do not have any existence, form or shape. Means this nominal account generally concerned with the income, expenses, gains, profit and losses of the business concern, and they doesn't have any existence, form or shape. For example, salary account, rent account, interest, loss by fire, loss by theft. These are the example of the nominal account. So nominal account generally concerns with income of the company, expenses of the company, losses of the company, gain of the company. Now there is a question you have to find out, means you have to classify the following items into personal, real and nominal account. First, capital represent to the owner. It means capital is a representative personal account. Ultimately it's personal account. Sales related to the sales means sales of the goods, and goods is the asset, the property. So sales is here real account. Drawing represent the amount withdrawn by the owner. So you can say drawing generally represent to the owner. So drawings is representative personal account, or you can say personal account. Outstanding salary means salary that is outstanding, means the salary that you have to pay, that is due but you haven't paid. So this outstanding salary represent to a particular person whom the salary have to pay. So this outstanding salary is representative personal account. So that is personal account. Cash is the asset of the company, or you can say property of the company. So cash is real account. Rent is generally expenses. So rent is nominal account. Interest paid is expenses for the company, and expenses always comes under the nominal account. Indian Bank, it's a name, it comes under the personal account. It's an artificial or legal person, you can say, because bank is created by law. So this is artificial personal account, and it will come under the personal account. Discount received means if you receive the discount, that is gain for you, and gain is the example of nominal account. Building, again building is an asset, is the property of the company. So building is real account. Bank again is artificial and legal person, because bank is created by the law. So bank is personal account. Wasim's account, Wasim is the individual, is the natural person created by God. So Wasim is personal account. Advertisement is generally expenses for the company. Whenever company do the advertisement, the company have to pay the cash. It means advertisement is an expenses for the company. So all expenses comes under the nominal account. So advertisement is nominal account. Purchases generally relate with whom you purchases, means total purchase that you done in any year. So purchases of the stock, purchases of anything. So generally when you purchase, it is asset for the company. So it will an asset is related with the real account. So purchase is the real account. So on the basis of personal, real and nominal, when you find out which account is personal, which account is real and which account is nominal, it is easy to find out the debit and credit aspect of the transaction. So for this we have to follow the golden rules of accounting. Means if you want to make the journal, this golden rules of the accounting is important. So if you find it for the personal account, the golden rules of the accounting is debit aspect is the receiver and the credit aspect is the giver. For the real, debit means what comes in, credit means what goes out. And for the nominal account, debit means all expenses and losses, credit means all incomes and gains. Means in the personal, the person who is receiving is called the debit, and the person who is giving the amount is called the credit. For the real, whatever asset is coming to the company, you have to debit that asset, and whatever asset goes from the company, you have to credit that thing. And for the nominal, all the expenses and losses item, just like rent, just like salary, these are the expenses, you have to make debit of that thing, and all the income and the gains that you are receiving in the company is having the credit aspect. So this is the golden rule of the accounting that is very important for making the journal entries. Now the next is accounting equation. So before accounting equation, we have to understand what is double entry accounting system. So double entry system is introduced by the business world by an Italian merchant named Luca Pacioli in 1494 AD. So if you find there numerous transactions in a business concern, we already studied the accounting period assumption, and in that accounting period assumption, always the accounting period consists 12 months. So if you see the 12 month, you will find out numerous transaction in every business concern. So each transaction, when you closely analyze, closely watch, reveals two aspects. First aspect is always the receiving aspect, means you are receiving something, or incoming aspect means you are receiving something, or incoming aspect, or expenses and loss aspect means always there is one aspect relating to the receiving and the income aspect, or you can say expenses and the loss aspect. So these two aspect is known as debit aspect, and the other aspect, when you closely watch and closely analyze the transaction, the other aspect you will reveal that is giving aspect or outgoing aspect, means you are giving something, or it is going out from the company, or it is related with the income or gain of the company. So this aspect is called credit aspect. So these two aspects, namely debit aspect and the credit aspect, form the basis of the double entry system. In the double entry system, always these two aspects, debit aspect and the credit aspect. So just remember, this thing is important for the journal. So double entry system is so named since it records both the aspect of the transaction. So why we are calling this thing double entry system? The reason is, whenever you make the transaction, whenever you are recording the transaction, it records both aspect, means debit aspect and the credit aspect. That's what is called double entry accounting system. In short, the basic principle of this system is, for every debit aspect there must be a corresponding credit of equal amount, because debit is always equal to the credit. Means whatever you are receiving, you are paying that amount also. Means suppose you purchase goods worth $5,000, so here your debit aspect is you are receiving the goods of $5,000, and the credit aspect is you are paying $5,000. So receiving aspect $5,000 of the good, and outgoing aspect or the giving aspect is you are paying $5,000. So always debit is equal to the credit. Now, the source document is the origin of the transaction. Means if you initiate the accounting process, the first thing is source document, means bills, receipts. These are the source document, means it initiates the accounting process, and whose starting point is accounting equation. Means after source document, the starting point of the accounting is accounting equation. An accounting equation is based on dual aspect concept that we already studied in the previous PPT slide, that is debit and credit aspect. It emphasizes on the fact that every transaction has two-sided effect. For example, on the assets and claims on assets. So always the total claims, means those of outsiders and of the proprietor, will be equal to the total asset of the business concern. So the claims are also known as equities, means claims of the owner, that is also known as the capital, and claims of the outsider, that is also known the liabilities. So if you it means you can say asset is always, means properties of the company is always equal to the outsider's claim and the owner's claim. Or you can say, on the basis of this, you can make formula asset is always equal to the equities, or you can say asset is always equal to capital plus liabilities, or capital is equal to asset minus liabilities, and the last is liabilities is always equal to assets minus capital. Now, on the basis of these formula, we have first illustration, means if the capital of a business is $3 lakh and the other liabilities are $2 lakh, calculate the total asset of the business. So if you remember the formula, asset is always equal to the capital plus liability, means owner's claim plus outsider's claim. Owner's claim is capital and outsider's claim is liability. So asset is equal to capital plus liability, and capital here is 3 lakh plus liability 2 lakh. It means assets, total property in the business organization is $5 lakh. Now second illustration is, if the total asset of a business are $360,000 and capital is $2 lakh, calculate the liability. So formula is liability always equal to asset minus capital, and asset is given to you here 360 and the capital is given to you $2 lakh. So if you minus 360 minus $2 lakh, you will find out the liability, that is 1,60,000. means these are the loans of the outsiders, 1,60,000. Now the illustration 3 is, if the total assets of the business is 4,50,000, this total property of the business is 4,50,000 and outside liability are 2,50,000. So calculate the capital. So we have to use the formula, capital is equal to assets minus liability. Asset already provided to you in the question, 4,50,000, and liability is also provided to you the question, 2,50,000. So 4,50,000 minus 250, you will find out the capital in the company is $2 lakh, or you can say owner's equity in this question is $2 lakh. Now the illustration 4, we have to make the accounting equation. So transaction first, Ali started business with rupees 50,000 as capital, means Ali started the company, the business, and invested 50,000 as a dollar. So the business unit has received asset, the property totaling 50,000 in the form of cash, because cash is also the asset. So company or business is receiving the asset in the form of 50,000. At the same time, the claims against the firm are also 50,000 in the form of capital, because owner invested 50,000 as a capital, so that is the owner's claim. And we already know the formula for the accounting equation. We always use this formula, asset is equal to capital plus liability. So in this transaction, asset is cash and capital is 50,000. So cash is 50,000 is equal to 50,000 and liability is 0. So accounting equation will be 50,000 is equal to 50,000 plus 0. And just remember, asset always equal to the capital plus liability, means both sides should be equal, otherwise it will be wrong. So see here, asset is 50,000 means cash is 50,000, at the same time capital is 50,000. Now the second transaction is Ali, means owner, purchased furniture for cash $5,000. So see here, the main point, the cash is reduced by 5,000 because we already have 50,000 and now we purchase the furniture. It means cash, our asset, is reduced by 50,000, but a new asset of the same amount has been acquired by the company. We paid the cash 5,000, but at the same time we purchased the furniture. So this transaction decreased one asset, that is cash. Cash is decreasing, but at the same time the other asset, furniture, is increasing in the same amount in the company. So leaving the total of the asset of the business unchanged. So equation will be, before that cash was 50,000. Now we purchased 5,000 value of the furniture, so cash is 45,000. At the same time we acquire new asset, furniture, that the value of the furniture is 5,000 and the capital is 50,000. So see, asset is always equal to the capital plus liability. Asset is cash and furniture, value is 50,000 and capital is 50,000. So 50,000 is equal to 50,000. That is our accounting equation. Now transaction third, he purchased goods for cash $30,000. Now see here, he purchased goods, means goods is again a asset for the company. So there is again an asset of 30,000 acquired by the company, but he paid cash 30,000. It means cash is decreased by 30,000. At the same time we acquired the stock of 30,000, so the leaving the total of the asset unchanged. So here the accounting equation will be, now we have cash, furniture, and we purchase stock. So we have three assets here, cash plus furniture plus stock, and the liability is same, capital plus liability. So cash before that equation we have 45,000 cash, but we purchased 30,000 value of the goods. It means cash in the company is 15,000, furniture is the same as the previous slide, 5,000, and stock we purchased 30,000 value of the stock, so value of the stock is 30,000, capital is 50,000, and liability is 0. So equation is we have 50,000 asset in the form of cash, furniture, and the stock. At the same time we have capital 50,000 and liability is 0. It means the equity is 50,000. So asset is equal to equities, and 50,000 is the asset, equities is 50,000. Now come to the transaction 4. He purchased goods on credit for $20,000. Means Mr. Ali purchased goods 20,000. It means our stock increased by 20,000. Means our asset increased by 20,000. But we purchased on credit basis. Means we will pay after some time. So it will create accounts payable in the company. Means that is the claim of the outsider. You have to pay 20,000 to the outsider. So this transaction will increase the value of the stock on the asset side, and at the same time will create a liability in the form of creditors or accounts payable. Creditors and the accounts payable is the same thing. So accounting equation for this transaction 4 is we already have cash, we already have furniture and the stock. Cash we have 15,000, furniture is the same 5,000, stock is increased by 20. So before that we have 30,000 of the stock, now we purchase 20,000 more, so stock value now is 50,000, and the capital is 50,000, same as the previous, but there is a creation of new liability, that is account payable 20,000. So if you add the total asset, we have 70,000 of the asset in the form of cash, furniture and the stock, and if you add the equities is 70,000, capital is 50, and accounts payable is 20,000. So asset is 70,000 and the equity is 70,000. Now transaction 5. Goods costing $25,000 sold on credit for $35,000. Means we sold the goods of $25,000 for $35,000. Means there is a profit of $10,000, and this profit will go to Mr. Ali. So Mr. Ali's capital will be increased by $10,000. So you can say this transaction will give rise to new asset in the form of debtors to the extent of 35,000, because we are selling on credit basis. It means we are not receiving the amount, so it will create a new asset in the form of debtor. Debtor is also known as account receivable, and stock of the goods will be reduced by 25,000 because we sold $25,000 of the goods. So the net increase of 10,000 means 25,000 of the goods we sold for 35,000. So that 10,000 is the profit, and that profit is related to the capital, because all the profit we have to pay to the owner. So, and capital is the investment of the owner, so capital will be increased by 10,000. So new accounting equation will be cash plus furniture plus stock, plus we have to add new stock, new asset, that is account receivable. And for the equity side it will be same, capital plus liability, or you can say capital plus accounts payable. So cash is same 15,000, furniture is same 5,000, but stock will be decreased because we sold $25,000 of the stock. Before that we have 50,000 of the stock, 25,000 we sold, it means the stock is now 25,000. And we sold for 35,000, it means we have to receive 35,000 from that person, that is known as account receivable. So account receivable is 35,000. So total asset we have 80,000. So 80,000 is stock. Total asset we have in the form of cash, in the form of furniture, in the form of stock, in the form of account receivable or debtor. At the same time equities we have 60,000 capital and 20,000 accounts payable, so it is equal to 80,000. So if you see, asset is 80,000 and the equities is 80,000. Now transaction 6 is rent paid $3,000. Rent is generally in expenses, so you paid rent, it means you paid cash. So your asset means your cash will decrease by 3,000, and it is also decreases the capital, because it always the expenses decrease the capital. So the accounting equation is, we have 15,000 cash but we paid 3,000, so cash is 12,000 now, furniture is same 5,000, stock is same 25,000, account receivable is same 35,000. so this is the total asset in the company. And the equities means capital is, before that capital was 60,000 but we paid 3,000 as a rent, so capital will be 57,000, and liability means accounts payable is 20,000. so if you add this thing both side, you will find out the total asset in the company is 77,000. At the same time, the equities in the company is 77,000. so on the basis of this accounting equation, you can also make the balance sheet, because in the balance sheet one side shows the liability and the other side shows the asset. So from the accounting equation we already find out capital in the company is 57,000 and the liability in the form of accounts payable is 20,000. so total liability is 77,000, and in the asset side we have cash 12,000, stock we have 25,000, account receivable is 35,000, furniture is 5,000. so if you add this thing, you will find out the total property, total asset in the company is 77,000. so in the balance sheet always the asset is equal to the capital plus liability, and asset is 77,000 and capital liability is 77,000. so this is the balance sheet that we have prepared on the basis of accounting equation. Now this is the practice question for you guys, so just practice it in your home, and this is all for now. Thank you. Thanks for watching our video. For more video visit www.rashidvirtualacademy.org. Thank you.